Have you ever stopped and wondered what really makes a company like Amazon, well, Amazon? For decades now, it's been running on this really unique, almost obsessive internal philosophy. So in this explainer, we're going to dive into more than 5 years of Amazon's own shareholder letters to really decode their secret sauce, the Day One philosophy.
In this quote from Jeff Bezos, man, it sets the entire tone. For Amazon, Day Two isn't just about, slowing down a bit. It's a legitimate existential threat. It's a path that ends, just like he lays out, with the irrelevance, then a painful decline, and finally, death. This isn't just some motivational poster stuff. It's a core statement of survival. And honestly, it's the driving force behind everything we're about to unpack.
So what exactly is this Day One that they're so fired up about keeping? Well, at its heart, it's a cultural mindset. It's all about a relentless focus on invention, making decisions with incredible speed, and always playing the long game.
Now, what's really fascinating here is the core tension this describes. Amazon basically wants to have its cake and eat it too. They want the massive power and reach that comes with being a giant company, but they also crave the speed, the agility, and the willingness to fail that you'd normally only find in a startup working out of a garage. And holding those two opposing forces together, that's the central challenge of always being in Day One.
Okay, so to make that startup mentality work at a massive scale, you need a North Star, right? Something to guide every decision. For Amazon, that is, without a doubt, the customer. Customer obsession isn't just one part of the Day One mindset. It's the absolute foundation that everything else is built on.
And this quote just brilliantly explains why. Amazon operates on this core belief that even your happiest customers secretly want something better. They just don't know what it is yet. And that belief gives them permission. In fact, it demands that they invent new things on behalf of their customers instead of just reacting to what people say they need.
This is such a crucial distinction. As they say in their own letters, most big tech companies are competitor-focused. They look at what everyone else is doing and then play a game of catch-up. Amazon deliberately chooses a different path. For example, they claim that something like 90 to 95% of what they build in Amazon Web Services is driven directly by what customers tell them they want. It's just a fundamentally different way of looking at the business world.
Now, to maintain that intense focus, they have to fight against something they call proxies. A proxy is basically anything that stands in for the real thing. It could be a process that becomes more important than the actual results it's supposed to get. Or it could be relying too much on market research and surveys instead of developing a real deep gut feeling about what your customers truly want. Day One means you have to resist those kinds of shortcuts.
And here's the payoff for all that hard work. Let's be honest, no customer in a focus group ever asked for Prime or AWS or the Echo. As Bezos himself wrote, if back in 2013 you'd asked someone if they wanted an always-on cylinder in your kitchen, they would have looked at you like you were crazy. These were all huge leaps of faith, born from that obsession with delighting that wonderfully dissatisfied customer.
All right, so we've talked a lot about the what and the why. Now let's get into the how. How does Amazon actually put all this philosophy into practice and build what it calls its invention machine?
For years, Amazon has poured its energy into growing and globalizing what it calls its 3 main pillars. That's Prime, its marketplace for third-party sellers, and of course, Amazon Web Services. Each one of these is like a real-world laboratory for the Day One philosophy.
So let's talk about speed. Take Prime Now, the 1-hour delivery service. That went from just an idea to a public launch in, get this, 111 days. In that short time, a small team built the app, set up a warehouse in the middle of a city, stocked it with 25,000 items, hired all the staff, and designed completely new software from scratch. I mean, that is a perfect example of what they mean by high-velocity decisions.
Okay, how about adapting to local needs? This is a great story. In India, they rolled out these chai carts, basically mobile carts that drove around business districts serving tea to small business owners while teaching them how to sell their products online. And when they learned that business owners still found the process too complicated, they invented Amazon Call, which was a studio on wheels that could get a business online in less than an hour. It's just customer obsession in action.
And over in the world of AWS, you've got the story of Aurora. The team kept hearing that customers felt totally trapped by these super expensive, old-school databases. So Amazon spent years building its own compatible engine that was faster, just as reliable, and, this is the kicker, they offered it at 1/10 of the price. It pretty much immediately became the fastest-growing service in AWS history, all because they listened to a really clear customer pain point.
So, this all sounds pretty amazing in theory, right? But what are the actual tangible results? And on the flip side, what are the dangers that keep the company on edge? Let's take a look at the numbers and the risks that just don't go away.
Okay, so in 2015, as you can see right here, AWS was already a pretty big deal, making up 7% of Amazon's total sales. That's a huge result for an idea that, remember, no customer had ever actually asked for. But just watch what happens next.
Just 1 year later, in 2016, that slice of the pie grew to 9%. This chart is basically a picture of the incredible speed of a successful day one bet. When something works and customers love it, they don't just nudge it along, they double down hard.
And that doubling down? It pays off. By the end of 2020, AWS had exploded into a business with a $50 billion annualized run rate. $50 billion. It went from a risky internal project to one of the biggest forces in technology in just over a decade.
But let's be really clear about something. Being a day one company isn't just about celebrating your wins. It's about being perpetually paranoid. It means you also have to obsess over all the things that could go wrong, all the external forces and the internal laziness that could trigger that slide into day two.
And if you crack open their annual reports, you see the same risks pop up year after year. Here are the big ones. Constant, intense competition, the sheer complexity of international rules in places like China and India, and the never-ending fight to protect their own ideas. These are the relentless pressures that are always there.
And this brings us to the latest and maybe most interesting evolution of the day one philosophy. It's this attempt to completely redefine what success even means for a company of Amazon's size.
In his 2020 letter, Bezos proposed this really cool thought experiment. What if we measure Amazon not by its profits, but by the total value it creates for everyone it touches? Not just shareholders, but also its employees, the third-party sellers on its platform, and, most importantly, its customers.
Okay, so check out how they actually broke this down. In 2020, they calculated $21 billion in value for shareholders. But look at the other numbers. $91 billion for employees in pay and benefits, $25 billion for their third-party sellers, and then this massive number, $164 billion for customers, which they calculated based on things like time-saved shopping.
And this quote just brings it all home. The argument here is that creating value isn't a zero-sum game. It's not about just moving money from one pocket to another. The ultimate goal of this day one invention machine is to create brand new value for society as a whole. From this point of view, innovation is the real metric of success.
Which leaves us with a big final question. The philosophy is clear, the tools are there, but as a company gets bigger and bigger, more complex, and is constantly facing all these external pressures and that internal pull to just relax, can it really truly fend off day two forever? I guess that remains the ultimate test.